Hello and good day. This is Laura Sigmund from Business Triage Systems, and I'm here with our fantastic team, Warren Galloway and Lawrence Jackson. And tonight we're going to talk about the financial practices for COVID and beyond. We want to say thank you really quickly to Oakland County for giving us an opportunity to present this presentation. We expect that you'll get some really nice tidbits around your financial planning and looking at solutions. Again, as I indicated, I'm Laura Sigmund, the CEO. I really handle our capacity building and strategic planning, things around Operation Economic Gardening. Today's presentation is going to be primarily through Lawrence Jackson, our CFO, who handles the financial systems assessment and design, proficient in business financial evaluations. And lastly, Mr. Warren Galloway, our COO, who handles all things capital management and realignment and capital deployment and capital coaching. So I'm going to go ahead and turn this over to Mr. Warren Galloway to talk about our key personnel for the Oakland County.
Thank you, Laura. Thank you. Well, our key personnel, just heard from Laura Sigmund. She is our CEO, fantastic professional. She's the leader of our organization, and she handles our client intake design, our operations, and our capacity building, just as many great leaders should do. She already mentioned about myself, Warren Galloway. I'm the Chief Operating Officer. I handle capital management, capital sourcing. Then we have Lawrence Jackson, who is our Chief Financial Officer, CFO, who handles profit planning and many other financial duties. And then we have Benjamin Cunningham, who is the CPA that's on our team for this project, who works on all CPA related things. So that's just an overview of our team. I'm going to go ahead and turn it over to Mr. Jackson, who will begin to talk about the financial practices for COVID and beyond. So Mr. Jackson, you want to go ahead and get us started?
I certainly will. Thank you, Warren. Thank you very much. So we're going to go through some things that business owners should do on a regular basis that will prepare you for any situation and help you to make sure that you are prepared for things like the PPP as well as everyday operations. So I'm going to get started. The first thing is, in order to get the most from your financial system or your accounting system, you have to have accurate and complete financial records. Okay, so that's very important because until your records are actually complete and accurate, it will be difficult to do any of the other things that we're going to talk about today. Example, financial analysis and benchmarking. It's the old saying, if you don't have the right information going in, you won't have the right information coming out. So it's important to have those complete financial records. It also helps in order for you to examine your key performance indicators. And I would invite all of you to look at our video that was done simply around those key performance indicators and how to use those. Laura Sigmund did an excellent job of explaining that and helping you as business owners to capture that information. The next thing is to evaluate your firm's financial policy. And that is got to do more with compliance and reporting based on the type of business you are, as well as the different entity types. So there's, of course, a C Corp, you can be an S Corp, a partnership, a sole proprietor. And we listed LLC last because the LLC at the state level, you register that business at the state level, but from a tax standpoint, you could actually operate in any of the other spaces that were named. Okay, so making sure that you have a policy that says, okay, in the event that, for example, say that you're going to liquidate your company. In the event that we liquidate, this is how that will happen. This is who gets paid first. This is the procedures that we have in place to take care of that. The next thing is, yes, absolutely.
You mentioned two things that really had me thinking maybe our audience could use some further examination. When you talked about good information going in, good information coming out, are you referring strictly to just the bookkeeping method?
Actually, that's a very good question. That is key, bookkeeping methods as well, but also keeping track of, as we'll talk about a little later on in these slides, keeping track of your marketing strategies, so making sure you're setting some goals for your return on investment. But it starts with your bookkeeping methods. So you can, whether you're using QuickBooks, Wave accounting, something more complex than both of those, it's important to constantly watch and maintain those particular entries and make sure that you have a professional that can look those things over, so we know that your information is properly classified. A real quick example is I had a client that had done some improvements to their building, and they expensed all of the improvements. Well, those capital improvements actually should be depreciated. So when we did their income statement, it looked like they had a tremendous loss, when in fact they actually had a very decent gain, or their income was positive. So knowing where to classify things and having those things done properly is going to help you.
There's really good science to that, right? Because not all of us really know. We know that if we spend it, we want to capture it, we want to record it somewhere, doing the due diligence, but we don't necessarily know whether or not it's a P&L item. We don't know exactly where to actually capture that data, and that's very useful.
That's right.
The last question was
Business Triage Systems. We can help you with that.
The last question was in relationship to the different financial policies. You mentioned financial policies. How prevalent is that, as lingo for the average small business owner, and how do they go about establishing a financial policy? What's in a financial policy?
Those things really are, it depends on the business and the type of business, what might be in a financial policy. To give you an example, a single member LLC where you pretty much have a solopreneur, there may not be much in that particular one. But if you've got 10 employees and there's employee benefits, there's a lot of moving parts, then you want to make sure that your financial structure, we know where the flow is. We know how to make things go and make things work. And you outline those things in a financial policy. So it would vary per business.
Yeah. Hey, Lawrence, I have a question for you as well. You said something I think you might want to explain a little bit more information on. You talked about the saving the LLC for last to explain, but mainly because an LLC can operate in the same space as from a tax perspective, the same space as a S and C corp. You want to explain that just a little bit more so the entrepreneurs can better understand what you were making reference to?
Yes. When you file your documents to become an LLC with the state of Michigan or whatever state you're in, that is one level. That means the state actually recognizes your company as a business. However, when you register to get your tax ID, there's a question that's asked, and it says, are you a disregarded company? Now, I don't like that terminology, but they didn't call me and ask me what I should call that. But the bottom line is if you say yes, or if you're a partnership or a sole proprietorship, and you do not make the election to be taxed as a C corporation or a subchapter S corporation, then you are put into a default category. And that is different in terms of what people kind of can perceive. I've had people actually tell me that they were a corporation, but then when you look for your documents, you look for the documents from the IRS, they haven't made that election. So that's what the main difference is.
Got it. Thank you.
Can I jump in and add something?
You certainly can, sir.
So when we set up these LLC entities, if we do nothing, we automatically fall into the default categories For example, a single member LLC, if they don't file an election to do something else, they automatically get treated as a sole proprietor. If it's an LLC with two partners and they do nothing by way of tax election, they automatically fall into a 1065 partnership way of filing. So it really behooves us to do our own tax analysis to really see what we want to be. Because each one of these entities has its own tax rules. And depending on what's important to the business owner is really the entity that they should be choosing. But if they do nothing, the IRS is going to choose for them.
Yeah, got it.
Absolutely, absolutely. And that's the voice of Mr. Benjamin Cunningham, CPA. Thank you, sir. All right. The next one I think we went through was, okay, having client-specific financial goals and objectives. You should have revenue goals, gross profit goals, net profit goals, and again, there's that KPI, those key performance indicators. So revenue goals, that's the top line. What's my gross sales? What's the amount of sales I expect over year over year? And the gross profit is the gross revenue less your cost of sales or cost of goods sold or direct cost of selling. The next one would be your net profit or your operating profit. That's the profit after all your regular operating expenses. So, and again, I mentioned earlier, we have another full video on key performance indicators that I would invite you to make sure that you check out. The
And
next
let me add to that, Lawrence.
Yes, sir. Yes, sir.
So from a controllership point of view, right? Based on client goals and objectives, we prepare a plan to achieve those objectives. And it really starts from having accurate and complete accounting. Because without that, these numbers or these computations that we come up with are meaningless. So we want the most meaningful computations so we can influence outcomes. And when we get into talking about client-specific goals, we also got to think about other reporting things that should happen in terms of if the business has a loan, we might have some special reporting that has to happen there. If they're doing government contracts, we may have to have some special reporting. If they got these different certifications, that brings in some special reporting there. If they're dealing with tier 1, tier 2. So I'm saying all that to say, just from a top level point of view and looking at the firm's policies and all that, we start with the compliance of what you have to do. Then we throw in what the client wants to do. And then we have to take in consideration the other things like the reporting to banks, reporting to governments, getting your certifications and those, because that's what this thing really is all about. What we're trying to do is really maximize higher client experience and situation, you know, with this controllership level guidance.
Absolutely. Absolutely. Thank you. Thank you. With that, I'm going to move to the next one, and that is evaluating financial decisions. So one of the things that's very important is to make sure that you evaluate or analyze the things that you've done on a regular basis. I don't think it's a good practice, and anybody can jump in and correct me, but to just wait until April the 14th to start making financial decisions. These things need to be done all along the way as you get new contracts, as you get new customers, as you pivot through this COVID situation. You want to evaluate what type of decisions you've made, and we've got three things that you want to keep in mind as you're evaluating these decisions. One, did I make a right decision, and do I keep on this course? Do I stay the course? I decided to buy this new piece of equipment, and it's supposed to be more efficient, and you're finding out that it's maybe not as efficient as you thought. Do I stay with it? Do I sell that equipment? Do I make some adjustments? Okay. Do I change the decision? Going back to the equipment, you know, is it working? It's working great. Now, do I turn the heat up with it? Do I try to make more parts or more tubes of shea butter, what have you? And then do I need to create some additional evaluations or additional benchmarks for the financial decisions I've made? So I've got a question for Ben. When you're looking at these things, what type of mindset should you have? I mean, we've got three things down there for people to take a look at. But would you
We're on the same slide. We're on the original slide, LJ.
Oh, yep, it's just the one down at the bottom.
One bullet at the bottom.
Yep, one at the bottom. Yep.
So to answer your question, you know, we want to really keep it simple, right? Things that are working well, we're going to keep that. Not only are we going to keep it, but we're going to double down on it. Things that aren't working, we're going to stop that immediately, whether we're dealing with the information or we're dealing with personnel, because the objective is to put the right people on the bus and get the wrong people off the bus as quick as possible. So that's part of the change, right? So we change our information, make that better, change our team situation. And we gotta continue to innovate and better use technology, work smarter, not necessarily harder, because if they can't increase revenue, then our alternative is to control the costs.
Exactly.
And one way of controlling costs is we have to operate smarter, right? And get things done with less resources. So that's my mindset. And I try to walk clients through that, just keeping it simple, because, you know, I've been doing this for about 20 years now. And what keeps coming up, the recurring theme, is clients overthink stuff all the time. So what we want to do is bring them back to ground level and then walk them through some of these strategies.
Gotcha. All right.
May I ask a question?
Oh yeah, I was going to ask a question as well.
All right.
Please. So what I gather from the summation from Benjamin and from Lawrence is that we really shouldn't go it alone. It really sounds like we should have an accountant or a CPA more intricately involved in our operation versus just at reporting or quarterly reportings. Or is that what I'm getting from you all, that we should have you as part of the financial decision-making process?
Absolutely. I think, and Ben, I'll let you answer as well, but I think that the folks that do that come out way ahead. You don't get blindsided by taxes or compliance issues, because you are constantly paying attention to that financial piece of your business.
The impact of that decision, right?
That tells the story.
Well, and think about it this way. You know, when you're dealing, when a small business owner is dealing with a bank,
Right.
Banks don't tell you to go get an accountant. They tell you to go get a CPA, right? And there's a reason for that. You know, CPAs can give you that full coverage on the financial side of things. And then we have these professional standards that we have to follow. And those standards are in place to make sure the product deliverable is a good product. right?
Mm-hmm.
And then on
Right.
top of that, CPA's got something to lose. So when that CPA got something to lose, he's trying to guard what he has because that one thing separates him from everyone else. So business owners will get an extra layer of due diligence because the CPA is worried about what he got, right? And we can work this in a couple different ways. Some business owners don't want to be involved with the finances, and that's fine because we can do that 100%, and then we can review it with them, teach them the information, so when they're speaking to third parties, they know what they're talking about, but they don't have the burden of trying to put it together. But then we can also work it a way where clients can do pieces of this and we can review it, make sure it's tight, add guidance on top and influence the outcome that way. We can work it that way. But going back to what Lawrence said in the previous slide, they should have some level of a relationship with a CPA. No question about it, because that's what we do. That's all we do. And we pretty good at it. And we don't want to lose what we have. So I say that, jokingly, but I'm so serious.
Yeah, right.
Because just the threat of losing a CPA's license, that gets you the extra due diligence that you're looking for. And, banks and third parties are really, really comfortable with our product because they know we're going to hit all the professional standards to make sure it's a good product.
So,
Got it.
so
So I still have a question as well.
go ahead, Warren.
So
Go ahead.
we're talking about financial practices for COVID and beyond. COVID was a crisis, or it still is because we're still in the midst of it. It's a crisis situation. So most small businesses are thinking about, okay, I need to generate some money for my business, revenue. I'm not thinking about financial practices. I'm thinking about keeping my doors open or getting my doors back open. What do you say to someone like that that's thinking, my financial practices are the last thing I'm thinking about? Okay, I get it. You want to increase your revenue, but you can't due to COVID-19. I want to control my costs, but I'm not even thinking about the costs right now. I just need to bring some revenue through the door. What would you say to someone like that? Because
and that's a reality for so many.
it is.
So what I would say is really, all these things really do work together because they can spend additional time beefing up their sales. But what's going to happen on the back end, they're going to let some other things slip and they're going to get to the end of the year and have this big tax bill because they weren't doing some of these other planning strategies, right? So yeah, you increased your sales on one end, but you didn't properly plan your tax situation. And now you got this big bill on the back end because when I see these crisis companies and they're worried about where their next dollar is going, 9 times out of 10, they get that next dollar and they spend it right away.
Right.
And then they get to the end of the year, got this big tax bill with no money.
Yeah.
The IRS don't want to hear that sob story because when you look at what's been happening in the country and all this stimulus money being spent by the government and all of that, trust me on this one. At some point, the IRS is going to be trying to get some of that money back, right? Yep. Because we got this huge deficit. The president got his tax decrease. That created more of a deficit. And, it's going to be a time where the IRS is going to have to beef up its activity to get some of this money back. And then when we look at a lot of this money that's been spent in stimulus, a lot of people got the money that shouldn't have got the money. And a lot of those things are going to come out, and that's going to create another line of work for BTS type of a company, because
Yeah.
those people are gonna need some representation, because it's really two problems. If they got stimulus money, they lied about it, that's a federal problem. And then the IRS is looking at it from a tax situation. So that could be a 2-for-1 problem for someone who's really gonna need some skillful representation.
Well, thank God
Absolutely.
we've got a CPA on our team who speaks legitimately but sincerely around some of the challenges that people are going to have to deal with in just a few short months, probably.
Oh,
Absolutely.
With those
very much
comments,
so. Yeah.
yeah, those comments really is coming from or stemming from my experience as a former IRS agent.
Mhm.
Each
Mhm.
time we had a new president come in, it was a different agenda. We got different directives that the IRS agents had to go out and execute. So
Mhm.
we gonna get another one. The
Mhm.
government is broke, the states are broke, and everybody want their piece of the pie. No,
Okay.
I'm serious.
No,
This
Yeah.
gonna get
No,
ugly.
but
we
I
totally
listen
get
to
it.
you, but I
We
think about,
totally get it.
I exactly. So I just think about the business owners who are going to look at this video. And it's almost like, in simplistic terms, you got a woosah. Even though it's a crisis, stop. Think about what's going on. Think about what you need to still be doing
Yeah.
in terms of financial practices.
Mhm.
Because
Yes.
in crisis modes,
Mhm.
you drop all basic habits of life, basic habits of business. Hey,
Survival.
you
Yeah.
just, it's survival. But
Survival. Yeah.
woosah, stop. Let me think about this as I move forward. That's what I'm hearing. And I think in simplistic terms, that's what we want to communicate to the business owners who would hire BTS to work with them.
Absolutely. And
We
I
better
mean, if
give
you
the
look at,
presentation back to Lawrence.
yep, no, that's okay. If you look at what we're talking about, even with this slide, I mean, adjust your costs. You got to do that in these trying times, but you should be doing that on a regular basis. What we're trying to help people do is create habits to help the
Yes.
business owner to become a little more sophisticated with their
Mhm.
financial
Mhm.
situation, so that when these pandemics and these crises hit, you don't have to panic. I learned from being little, if the bully is coming after you, the worst thing you could do is panic. So you don't want to panic in these situations. You want to make sure that you have your house in order, so that you can move forward confidently. And these items that we're covering, and I'm going to kind of speed it up a little bit, but I want to make sure we touch on some things so that people that are looking at this video understand some basic things that they put in place that will help them to get through the pandemic, as well as their regular operating systems. So adjust your costs. You got to know what your variable costs are. Those are direct costs. The fixed costs, those are reoccurring costs, cost of your labor. But I like this last one, the break-even point. That's a sanity check. Ben, we talked about that a little while when we were putting this together. Tell us what you mean by a sanity check. Are business owners insane or what?
Or the accountant. So, so what's important about that particular point is you got a lot of businesses that are in crisis mode. You got a lot of newer businesses who don't necessarily have it all together. So this break-even point, when I think about new businesses, crisis businesses, it takes me back to sales
Mhm.
and question of, are you properly pricing your products and services with worrying, or without the worry of overpricing or underpricing, right? Because if you overprice, you're not going to close the deal. If
Mhm.
you underprice, I'm a shrewd vendor. I might buy everything you got because I know I'm getting a deal, right? So I use this break-even point insanity check to help business owners actually price their service, because the formula really should be break even sales plus P. And the P would represent profit, right? Break even sales plus P. So what clients need to make sure, especially the ones in crisis mode, that they're in that sweet spot of their pricing, so it'll help them close deals.
Okay.
And we can actually show people how to calculate break even, how to determine what the P is. And what this will do is help small businesses sanity check the sales that they got, because you can do the break even sales plus P and go backwards through your system to see if I'm charging enough or charging too much. You can actually do that, and then you can do your what if scenarios and change numbers and look at, okay, if these costs go up, how would that impact my break even sales plus my profit? And we certainly can show people how to do it, show them how to determine the profit component to make sure that they're in that range of what their industry is charging. Because that's really what you want to do. You want to make sure when you're pricing something, you in the range with all your competitors. Because if you're outside that range, it's trouble.
Absolutely. And that's a good segue into the next one, is knowing the value of a customer. How much does a customer cost you? How much does a customer spend? What is your average spend? And again, going back to the very first point we made, if you don't keep accurate and complete financial records, I don't know how you figure that out. What's your customer service profile? How do people get treated when they come in your business? Why is that there? Is there a financial element to that? Absolutely. Because if your customer service is not up to par, then people will leave and you'll lose money. I mean, that doesn't take a rocket scientist to know that kind of thing.
Even in
But
the
I think
crisis,
that when we're dealing with, say that again.
even in the crisis.
That's right. Especially in a crisis. All right. Review the true cost and use of space and equipment. Especially now, a lot of people are finding out, even, I mean, the fact that we're on this call and we're doing this presentation virtually, we're using a technology that's been around, but we're relying more on technology. So people have to make a decision. Do you keep the space that you have? Do you still need that space? Do you still need a 3,000 square foot showroom for your retail business? So we have to look at that. And then and Laura does a great job of this in the KPI video, looking at the assets you have. Is that equipment that you have still useful? Has it worn out its useful life? Do you need to replace it? Do you even need it? Can you sell it and generate capital? So,
hey, Lawrence, I have a question for you based on what you just said. So once again, we're dealing with some businesses that, we're in the midst of COVID-19, and everyone thinks that they're going to survive and they're going to keep all these assets around. How soon after this crisis has started should you start evaluating those things to see whether you need to keep those things around? Do you need to downsize? People are locked in the lease, for say another year. And so is it worth breaking the lease to downsize? I mean, what should they consider? Both, I guess it's a question for both you and Ben.
Ben, you want to go first?
Well, this is something that I know we're in a crisis, but we're supposed to always be looking at space and equipment. We're supposed to always look at that and have a plan B. And because this is not going away. And I'll use myself as an example. I figured out how to do a lot of what I do from home using technology. I may go into the office twice a month now. So I'm basically paying for storage, right? But we should always be looking at it, because this will not go back the way it used to be, because people are figuring this out. I mean, this is a perfect example. We're doing a virtual presentation and using technology that can be used in everyone's business, that can save you some time, save you some money. Because again, if we can't increase our sales, and we figured out how to use technology to reduce our costs, that's a pretty good situation.
So Ben, so I have a question for you. So using your example, using your situation, so you got this office that you're only using twice a month. Can you justify that cost? Because technology is working for you now.
Well,
And I ask that question only because these are the questions that entrepreneurs have to ask themselves.
Business Triage Systems needs to answer that question.
Exactly.
That is my point. That right there, what you just said, Warren, is the point I'm making. You know, I'm paying the costs, but from a real business point of view, no, I can't justify the costs. So right now I'm in a situation where I'm thinking, what do I want? Do I even want to do it? Right? Because I can actually save a little bit of money, but I'm going to need an office for something. Maybe, you know, the entire cost I can't justify, but maybe 50% of the cost, because you still need a place to meet people. Because, you know, if you're working out of your home using technology, I don't think you want the customer coming to your house. So you're going to need an office for that purpose.
Yeah.
And then you need an office so people can have the right optical view of you. Because if you don't have an office,
There you go. You
have a tendency to
minimize or diminish.
Or think you're a fly-by-night business.
Yeah. So we don't want that optical view either.
No.
We're doing the right thing by talking about it, but we got a couple other things to consider. We need that optical view. We need a meeting place. So the question is really size. Do I need 1,000 square feet?
There you go.
Or do I need 500 square feet? Because with social distancing and all that, we're supposed to be reorganizing our office and staggering workers and all those different things anyway.
Right. Okay. Well, thank you. I don't think I can add much to that. So I'm gonna keep this thing moving if I can get my computer to act right. All right. So I want to come back to this slide, because there's another topic I want to hit, and I think it's on the next slide. And there it is. Okay. Matching loans to the right use. Okay. Matching loans to the right use. In other words, you got lines of credit, you got credit cards, you got term loans, fixed loans. You need to have bank accounts. I talked to a young lady yesterday that made $25,000. Now that might not be a whole lot of money, but she was running it through her personal checking account. And when it came time to do the taxes, she had a big mess. I know people that have done these things and have made a whole lot more money. But I want to ask, I'm kind of switch it up a little bit. I want to ask Warren a quick question.
Yes,
what
sir.
is the right loan for this season that we're in?
Since we need to be looking at the bottom line and looking at our debt and everything, I would think a line of credit would be ideal during this crisis. Because at least with a line of credit, you can tap into it on an as-needed basis in that you're not carrying a large debt. The opposite of that is, as you have on here, a term or fixed loan. A term or fixed loan is, you know, you apply for 50,000, you apply for 100,000, you have equal monthly payments for 36 months or 50 months. That equal monthly payment is due every month. Whereas with the term loan, the payment that you make typically is only what you draw down on, but some lenders have you only pay interest only payments. And so I think you have better control over the debt that you have with the credit instruments when you have a line of credit. As long as you don't use it for large equipment or fixed cost, long-term cost type items, a line of credit, I think, would be ideal in this environment.
So a lot of folks got that payroll protection program along. I'm kind of out of sync with my slides, so y'all
That's
just gotta
okay.
bear with me. I'm all excited and everything. I got all my favorite people on the call with me, so you know, I might get a little out of control here. But anyway, a lot of people got that payroll protection loan. Now
Mhm.
that's a fixed payment loan with a deferment. Okay. So when you're looking at that, let's say I got, let me do a quick case study. Let's say I got $50,000 for my payroll. And
Right.
just for sake of example, I used it for the proper purpose. But since I have 24 weeks and not 8 weeks, I've got all my records in place, but I'm looking at this loan getting ready to mature or getting ready to have to make payments. Should I try to refinance that loan and pay it off so I can get, so as Ben said, I can keep the government off of my tail because they think I got it illegally? Or
We,
how could I, what process could I use to possibly mitigate the risk that that loan presents?
well, I'm gonna use something that Ben mentioned earlier. We should always be evaluating things. Okay,
Mhm.
so when you talk about refinancing, we should always be looking at how we can put ourselves in a better position with our debt. And so if it's advantageous for you to go ahead and refinance that PPP loan with a bank loan with similar terms, without having the government on your back, absolutely you should look at it. But see, what I thought you were going to focus on is let's try to see what we can do to have as
Make it
much of this
forgiven.
loan forgiven. That would be my main focus, because we know
Well,
a portion of this could be forgiven and it will reduce your debt. So I guess with the PPP, you're looking at both. How can I maximize the forgiveness portion of it? And then I'll come back and reevaluate whether or not I can refinance it with
The
better
balance.
terms,
Mhm.
better rate, the balance, right, or better rate. Or should I not? I don't know. You make that evaluation then. So
At 1%, I'm probably going to say that there are no instruments out there on the marketplace that you can refinance
that's
at
right.
a
absolutely. So
better
you're
rate.
gonna be keeping the government in your backyard for a while. Then you're correct at 1%.
Right. But the other thing is, and kind of a point to make is they have changed that thing so many times
Mhm.
that it's kind of hard to know who's on first, who's on second.
Yes,
So,
right.
for example, if you got your PPP loan before June, I think it's June 9th, your repayment term is 2 years. Even at 1%, the payment on that $50,000 over 2 years, let's say you don't get it forgiven. I got that point. But let's say it doesn't get forgiven. They have a question. I was a sole proprietor and I paid myself 50,000 in 8 weeks. Oh my. Anyway, so let's say I don't, and I don't want to deal with the controversy. And so, again, maybe my credit is in a fixed. So what choices should I consider, knowing that I might end up having to have a 2-year term to pay $50,000 back?
So I know exactly where you're going with this. Looking at microlending, looking to see if a microloan is a legitimate option to refinance this loan. I mean, we're in a crisis, so even though 2 years is 24 months, you don't know if you're going to survive for 24 months. So you need to start to pivot with some of the debt that you have right now. Yes, this PPP is 1%, but if you got to pay it back in 24 months, you really need to look and see what other debt instruments you should look at to refinance. Yes, you will pay a higher interest rate, but you might get 36 to 50, 36 months to 50 months to pay off that loan if you refinance. So yeah, you might have to pay it 2 or 3% higher, but the debt is spread out longer, and it relieves some of the pressure of you trying to pay it off within 24 months. So I do see the direction you're going. That is a legitimate option to take a look at. There are a few banks that not necessarily are micro lenders, but they are They have products that are very good for this. And I'm speaking of a bank like CIBC Bank. You know, they have phenomenal products, great interest rates. I just found out about Huntington Bank's new products. If you have bruises on your credit, you can still apply for these loans, and that's what microloans do. But these new loan products that Huntington Bank has come out with, as well as what the loan products that CIBC Bank have, could be a good fix for refinancing the PPP loan.
You know,
Okay,
as well
cool,
as we
cool.
all work together, it's amazing to me how we all have a different approach. I would have told someone to grab the PPP money and use it to leverage getting another loan, pay back the PPP as quickly as you could, use it to service
Mhm.
other debt so that you could actually grow your access to capital. It's like loan sharking. I shouldn't say that as a recorded session, but um,
I was gonna say in this segment, you want to be careful there because you know that
Well,
PPP had a specific
it
use.
has specific uses, but in the course of your business, it makes sense for you to look at how best to deploy that capital. And Warren, you make a really good analogy there. Yeah, so 24 weeks is not sufficient if you're still in the midst of crisis and you've not been able to
Right.
rebound and bring in enough sales to actually service and cover the debt, right? It was a temporary payroll protection, but it
Right.
doesn't do anything to make the business solvent or profitable. It took care of
That's
one
right.
of your line item expenses. But if you need capital to move the business, you need capital to move the business. So having it
Yeah.
and trying to leverage it as an asset is, I think, a smart move too.
I think
so
so.
to
So
Laura's
here's what I'm
point,
going to do because we're running out of time. I
I
just
want to
want
make
just
one
for the
point.
sake
One
of
point.
hold on. Just for the sake of the people that's watching, I want y'all to look at this slide. We're not going to get a chance to really talk about it, but it's
No,
something you should
we
have on your
can.
mind.
We
And-
can. Warren just may not participate, but we need to, yeah.
okay. All right. Well, I wanted to kind of get a chance to wrap it up, but go ahead, Ben. Go ahead.
So to Laura's point,
Yes.
you know, the initial consultation or meeting, this is where we have to pin down the business owner to find out what their true goals and objectives are, and then we build a strategy. So whether it's using the PPP money as a loan to build business credit and build bank relationships, that's fine if that's the goal and objective. But at the same time, to Warren's point, you know, if the business owner got the money legitimately, right? They didn't lie about it, then they should be pushing for forgiveness. No question about it. And then once they get the forgiveness, the accounting treatment is that grant now becomes income, and the expenses the money was spent on becomes an expense, and it's net zero. And, you know, that didn't influence the bottom line. You know, it's net zero. So whatever the objectives of the client is how we should proceed with this thing, whether it be a loan or we apply for forgiveness.
Hey, Ben, you just brought up something I hadn't even thought about. So if you do have that forgiveness portion, you meet the criteria for it and it becomes a grant, do you pay taxes on that?
Well, it's going to be a zero effect. So
Okay.
the accounting movement is when we get this PPP money, we put it on the balance sheet as a loan at first. And then if we're forgiven, then it becomes income, but we spend it on payroll and business expenses. So
Okay.
we got 50,000 of income and 50,000 of expenses, net zero effect. That's how the financial statements will look. And then that
Okay.
once recorded liability loan, that's now gone.
We need
Absolutely.
Ben, don't we? Every business needs a Ben.
That's exactly right. Right. Okay, so Warren, I know you might have to take off. Do you want to make some parting comments or?
Well, I'll be able to finish this up now. This is too good to leave. It's so much good information that we need to deliver to our potential clients from BTS. You know, I'm staying on it for the next 10 minutes. So you have it.
I think we could do it. I think we could do it. All right, let me go back. Let me go back. Okay, so we're gonna switch back to marketing here for a minute and talk about making sure. A lot of people talk about marketing, talk about set up websites and things of that nature, but do we also look for a return on our investment? That's what that
Absolutely.
ROI stands for. Do we look at the social media? You know, I've had people tell me they've got 3,000 friends, but I always ask the follow-up question: can you get those 3,000 people to send you $1 a month? And most of the answer to that is, well, I think you know the answer to that. But do we need to make sure that we're tracking these things and valuing our time? Now, I want to ask Ben something, because this is something that comes up, especially for new businesses. If I am spending 20 hours a week, and let's say on my regular job, I make $30 an hour, and I'm spending $20 a week, 20 hours a week to get my business started, to do some research. Can I put that time on my opening balance sheet?
You're doing, the business is open, right?
No, business. This is pre-opening. It's pre-open.
Okay. Yes. Those expenses will be considered startup costs.
Okay.
And then you can amortize them over 60 months. You get to deduct the first 5,000 up front and the rest over 60 months.
First 5,000. So,
Yeah,
so the guy that told me
it's a current deduction, and then the rest is going to be an asset.
So the guy told me he feels like his time was worth $1 million. He got a little ways to go on that one, huh?
A little bit.
All right.
Oh man.
Do we know the true value of marketing campaigns? Anybody want to talk about how to put a value on a marketing campaign?
Well, I'll jump in and say something real quick, and then Laura, you go ahead and close it out. So my KPI for this is return on marketing.
Yeah.
Right? You divide the marketing cost by sales, that's your percentage. That can be a KPMI. You can establish what you want it to be in the beginning. You do that computation, you compare, right? If you don't like it, then you got a little adjusting to do. But we always got to have a baseline. We do a baseline comparison. Hey, we want our return on marketing to at least be 30% or 20%, whatever that percentage is. We do our baseline computation, and then we use our best management efforts to achieve the movement in those percentages. So go ahead, Laura, close us out.
Well, before Laura said anything, let me say this, Laura, you can close it out. Because I got to go back to the example that Lawrence gave when he coached that person, and he asked, well, if you got 3,000 people following you, can you get them to give you $1 a month? But you know, I think it's all about expectations when we talk about looking at social media. You know, this generation, social media influencers, they're looking to get 1 million people following them so they can create passive income by having advertisers pay them to reach that 1 million followers that they have. Whereas you, as a financial person, thinking like, okay, if I got 1 million people following me, can 50% of them buy my product, or 1 million of them give me $1 a month? So it's all about expectations. Social media expectations are completely different than what we traditionally see for a business. They're looking to see, hey, how can I stay at home in the bed and just post every day and make money from advertisers who want to reach that 1 million population, as opposed to someone like us. You know, we're thinking about, you know, how can I generate revenue to get these people to buy my product? So I think it really comes down to what the expectations are when you look at social media and followers. Am I off base on that?
I don't think so at all. I don't think so at all. Laura, do you want to add anything to that?
I do. I like what both Benjamin and Warren said, but I think I look at it as a practitioner myself. It is exactly what Ben said. I look at what I paid and what I expect, right? For instance, we ran a campaign to do a quarter of advertising at a theater, right? Like a AMC, right? So you pay a third party to allow you to run your video script, your promo in the theater. And it was $1,200 a month to do that. So it's $3,600 for a quarter, and you were locked in a quarter. You could re-up every quarter and continue on with the advertising. I elected to do one quarter only because at $3,600, I need to at least make $3,600 for it to have even been worth my time. But I certainly didn't go into it with the intent to only make $3,600, right?
Sure.
So I had to measure the number of phone calls that came in. I had to validate that and anticipate whether or not it actually created visibility into the marketplace. I had to then secondarily find out if I was really hitting the right audience who might be looking for business solutions, business planning, financial assessments. And what we found out, though we got 37 calls in a period of 3 months, that's not a lot. We were able to get only 2 business plans. Therefore, I consider that a failed marketing campaign because it did not make me solvent, nor did it increase my sales. It cost me money. So that didn't work for me. You have to look at it and put a budget on it and have some expectation, as Benjamin and Warren said, as to what the return should really look like. I found that even promoting on social media at $2 a day in certain demographics, in certain lanes, in certain populations, if I spend $2, I get 6 or 7 phone calls. I'm normally able to convert 1 or 2 of them, somewhere between $300 and $1,200 with a price tag. I find it to be far more fruitful as a return on investment.
Absolutely. And just to kind of bring that point home and to go back to one of the points we have on the slide is linking that marketing to finances, making sure that you're getting that return on investment and considering your labor and your time as well in that return as you're completing that. I'm going to jump to the next one, to evaluate payment cycles. Now, this has got more to do, when are you going to get the money? Depending on who you're dealing with, municipalities, universities, you might get a contract and you might be 60, 70, 90 days out before you receive any funding. And it's important to plan for that and to make sure that you take that into consideration. And then the next thing says, is every dollar a good dollar? Well, I don't think any of us need to talk about that. I don't know, anybody want to tackle that one, or either one of those before we move on?
Well, I want to go back to having those receivables out there. That goes back to the previous conversation about line of credits versus a term loan. That line of credit can cover your debt until those receivables are paid. And so it's more of a strategic way of making sure that you don't fall short of cash to continue to operate your business. So something as simple as a line of credit will get you through that payment cycle, hopefully, until you get paid. But you have to be a smart business owner. When you use a line of credit for a situation where outstanding receivables, but you still got bills to pay and people to pay, that you're disciplined, that when you do get paid, that you pay that line back down so you could use it again. So I think that's a great tool to use under that scenario.
Absolutely. And we here at Business Triage Systems can help you to navigate through those kind of situations. A lot of times we have more resources available than we realize. So that's why we're here. And we're actually here to help folks like Ben as well, because Ben, tell me now, if we can prime the pump, if you get organized data, you can do a whole lot more for that client than if they just come to you out of the blue with a shoebox full of receipts. You like that client? Is that a good dollar for you?
Well, again, my dad would always say when I was a kid, all money is not good money. All right. and that shoebox client is, that's what he was talking about. But the better organized clients are, the better it is for both sides, because when that client comes in the door organized, they keep their fees down, right? And it's just a better relationship with your service provider, because you know, when you're dealing with third parties, I don't care what the capacity is, they view you a little different if you show up prepared versus unprepared.
Absolutely.
And yeah, we'll be professional with you and all that. But as soon as you leave, hey, this guy came in here with a shoebox. What I'm supposed to do with that? I mean, you know, and I think about what banks go through all the time because they get a lot of garbage. And again, they're going to keep it professional with the client, but as soon as that client leaves, they're going to say something about it. This person showed up unprepared. They don't have a CPA. They got to go back and hook things up so we can move forward. Well, you know, these bank officials, they don't have a lot of time for that. They can't afford to make bad loan decisions. They got families. So real life has to be thought about when you positioning yourself in front of lenders. That's some serious business. So if you can come in the door and be able to articulate your finances and it makes sense, looks way better than the person who can't.
Absolutely. Absolutely. So
Can I
go ahead.
can I interject? So to our audience, because you don't actually know, we didn't give you a really big overview of who's on this presentation this afternoon or this day. Warren Galloway is a former banker. Lawrence Jackson is a former banker and on the underwriting side. And you heard Benjamin express several times, not only is he a CPA, he's a former IRS agent. And I consider myself the small wheel. I'm a practitioner, capacity building and operations. What you have is a full 360 approach when you have the business triage systems looking at your small business. And because Oakland County understands the great need for the variety of people who may come through their pipeline looking for specialized services, we're in a position to hear you, place you, and support your future growth. I think you have people who understand how the money moves. We understand the tax implications of the money, and we understand business process and operational improvements. That level of efficiency, having that level of hand-holding is so paramount and important. If you don't take anything else from our presentation, understand that if you were to call for business triage systems, what you would get is the entire package.
And with that, there's not much I can add to that. I love what you just said.
Well, I want to add something.
Okay, go ahead.
In the CPA world, we call what Laura just said is getting more bang for your buck.
I love it.
We do have the
terms.
ability
Boom, boom.
to address all financial transactions, regardless of what stage that transaction is in.
Exactly.
So we got those abilities. And again, you wouldn't have to bounce around to a bunch of different places to get those key financial answers.
That's right. That's right. All right. All right. I love that. So I want to kind of wrap this up, if I may, and just say, if you look at the last bullet point there, implement and identify government stimulus opportunities. We kind of went over what happens with grants and from a taxability standpoint. And we talked a little bit about the PPP, but what I would like you to know that is if you really need help with these things and you need help identifying and working with government entities, economic development entities, we are available and making sure that they can help you, and we want to send you to the right economic development group so that your business can benefit from the stimulus packages and the assistance, just like Oakland County is doing with this particular program, helping us to make sure, or helping you to make sure that you are sophisticated financially. So with that, I would ask if there are any closing comments from our panel. And if not, I want to bid everybody a good day. Thank you for watching. Get in contact with us, businesstriagesystems.com. Phone number is 313-444-2711. And you can reach out to us via email, businesstriagesystems@gmail.com. Any final comments?
Yeah, I want to say that you don't have to go it alone. Oakland County has granted you, Oakland County small business, the opportunity to self-select and to identify people who can relate to your particular situation. We had a lot of fun in our dialogue, in our conversation, this presentation. But understand that the reason that we are Business Triage Systems is because we have a breadth of knowledge and expertise and experience that will allow us to actually swiftly identify best next steps for you and your organization. No matter what they are, we are ready to help you pivot and to put you in the right trajectory. Nobody can tell you what November, December, and 2021 will look like, but we can start to create at least a plan. And through Oakland County's gracious opportunity, you'll have at least 2 contact hours in this contract with no cost associated to actually talk to us here at Business Triage Systems. So again, businesstriagesystems.com is our website. You see the phone number, businesstriagesystems@gmail.com. Warren mans that like it's nobody's business. There will be no delay. We'll get to you as quickly as possible. So I just want to encourage you to not have to go it alone. And if you put strategies in place and you just want to know if they make good, sound decision, reach out to us. You can have the IRS, former IRS agent, the CPA. You can have Lawrence, who we consider our underwriting guru. You can have the money man, Warren Galloway, or the person who knows process. That be me. I really look forward to working with you all in Oakland County. Warren, what do you have as a closing comment?
Not much more I need to add. Just know that given the years of experience that we have, we're not junior professionals. We're professionals that come with experience, training, education, so forth. And we are 200% committed to supporting your business. And guess what? I'm gonna add this. We love what we do. We're passionate about what we do, and we'll succeed at what we do.
All right. Mr. Cunningham, any parting comments?
My parting comment would be relative to the plans. They'll all be client-specific plans. This is where, we kind of been talking about different strategies. Well, the strategies are not one size fit all. So we do have to take the time, find out what your goals and objectives really are, and then develop a plan based around that. And it'll be differences depending on business type, business size, and business objectives. So it's all gonna be client specific. And, there is some monitoring that may need to happen. We develop a plan. If business owners need assistance with execution, we could do that. If the client chooses to execute, there can be some monitoring because we want to see how the plan is working.
All right. All right. Well, with that, I want to say thank you to all of my colleagues. Excellent job. And I want to say thank you to all of you for watching this video. And again, businesstriagesystems.com. Phone number is 313-444-2711, or you can reach out to us via email at businesstriagesystems@gmail.com. Have a great day.
Thank you.